Can you believe we just got into the new year and it's already tax season? Hello and welcome to Thursdays Live with Chugh. My name is Neha Mahajan. I'm the Business Development and Outreach Manager here at Chugh LLP Attorneys and CPA. Today, we'll be talking about the upcoming tax season. The deadlines are coming for individuals. It's January 23, and for corporations, it's a week later on Jan 30th. We'll be talking about Inflation Reduction Act and Secure 2.0 Act of 2022, along with why is it important to hire an experienced professional versus an automated system for your tax purposes. Please join me in welcoming our CPA from our Herndon, Virginia office, Ashleen Sahni. Hi there, Ashleen. Welcome.
Thank you, Neha. Thank you so much.
So, Ashleen, I'm not going to ask you how New Year has been so far. I know you have been really, really busy because the tax season is coming up and all our clients have been reaching out to you on how to prepare. So, in today's discussion, I need your expertise to come through. And I will be asking you certain questions around the upcoming tax season and, all the other policy changes that have come by and all the guidelines that IRS have brought by and a little bit into the future also. But before we get going, a disclaimer, the discussion today is for informational purposes only. It does not create an accountant or CPA client relationship. So if you have any questions for us, please be sure to send them to us via the comment section on whichever platform you are watching us on. We are live on LinkedIn, YouTube, and Facebook. Or if you're watching a recorded version, please send us your questions to info@chugh.com. That's info@chugh.com. I just want to tell you that this is season 3 of Thursdays Live with Chugh, and I'm mighty excited to bring this to you. Each week, we bring a pertinent topic related to legal or tax or immigration, and we discuss all these topics that are beneficial to you. Our in-house experts share their knowledge so that you can benefit from it. So, Ashleen, let's get started. I really cannot believe we are 19 days into the new year and already preparing for the tax season. What are some of the questions, that the clients are asking of you? Are they worried because, deadlines are just so close?
Yes, Neha. So, a good question to begin with. It feels like, for us CPAs, it's a tradition, an annual tradition that we go by every year, Jan through April, at least for most parts. We are busy with tax returns, assisting clients, businesses, and individuals. So, just like every year, this year also, IRS has announced its date, which is January 23rd, which is called the initiation of tax season. And, we begin filing of the returns, IRS starts accepting them and processing them. So, the deadline for individuals and corporates is April 15th, and then certain businesses, it is March 15th. So, it is the time to take care of your tax returns, annual compliance. That's an absolute requirement for you to be compliant.
All right. So, but one of the questions that clients are asking of you, are they coming to you, hey, Ashleen, I really don't know what's going on with the 2022, tax season. What are some of the tips that you share with them? If you could share those for our audiences also.
Right, absolutely. So, for deadlines, I would firstly say that even though, the first level of deadlines that are announced are March and April, we do have a 6-month extension, which is up till September 15th and October 15th. That being said, it is an extension to file and not an extension to pay. So if you have any taxes due on your returns, business or individuals, they have to be paid by April 15th. Otherwise, you would have to pay interests on top of it. Another thing to note is taking care of estimated tax penalties. For 2022, the dates are during the years. Every quarterly, you have to make an estimated tax payment so that, there's no estimated tax penalty that creeps up at the time of filing of the return. If you have not done so already, definitely consult with your, CPA to ensure that you have been taking care of this requirement.
Okay, I'm sorry, I'll just ask you a question. What is an estimated tax penalty? I mean, I don't know much about it, so.
That's absolutely fine. So basically, when you estimate your income during the year and you know that you anticipate certain amount of taxes that you would be required to pay to IRS and states, then that you have to pay them quarterly as on installment basis. Let me put it easily in front of you. For example, a W-2 employee, right? Their taxes get withheld with every paycheck and is being transferred to IRS on a monthly or a quarterly basis,
Yeah.
right? So just for other kinds of corporates where there's no withholdings, or self-employed people, LLCs, it's a requirement to estimate those taxes and take care of those payments.
Okay.
Otherwise, there will be an estimated tax penalty as per IRS regulations, and you will have to pay that on top of the tax.
All right. Thank you so much for explaining that.
No problem. And
So yeah.
just additionally, Neha, I would like to say this year, especially, until last year, couple of years, we've been suffering through COVID. So, the deadlines were going up and down during that time as well. This year, even though the deadlines are same for most parts of the country, just for California storm victims this year, we have seen that, the deadline, IRS has extended, just announced that the deadline has been extended to May 15th. And these deadlines apply for filing of the returns and payment of the taxes.
Okay. Okay. So this is only for California, the state of California, and certain counties who are really
Certain
impacted
counties,
by.
absolutely. If you're a resident of California and and you are impacted, definitely consult your CPA. That are you part of that group?
Yeah.
To certain counties, they have been announced.
Okay, all right. And this information should also be on IRS's website, right? For
Absolutely.
Someone, yeah.
Absolutely.
All
It's
right.
an IRS notification.
Perfect. And this applies to both individuals and businesses?
Yes, all filings will be done by May 15th.
Perfect. This is only for California. I just want to reiterate, this is for California because of the storms, because of the flooding. IRS has extended the deadlines to May 15th for both businesses and individuals in certain counties that were impacted by these floods. Now, so you gave us some tips in my previous question that I asked about individuals who are just getting started and how to get started and all of that. What about businesses per se? Do you have any specific set of guidelines when clients reach out to you, when corporates reach out to you, our clients? I do not run a business, so I have absolutely no idea how that goes. But I feel taxes are way complicated for business owners, right? So what advice do you give to those businesses who come to you, especially the first time?
Right. So first of all, I would like to clarify, right? The complexity really varies, whether it's an individual or a business. It really doesn't change, in either cases. It just depends on the transactions you've been involved with, the guidance you're getting, So complexity varies by that. But, when a corporate or business tax returns, what we like to suggest our client is have your financials ready. Definitely meet up with your CPA during the year also to close your books or to get your financials reviewed if your bookkeeping is done in-house, or have your financials reviewed. Any suggestions to close out the book, to make sure that you're in compliant during the year. Just for example, the estimated tax payment that we spoke about earlier, So all those things, a CPA can help you cover those gaps that you might be missing as a business owner. So, at this time, when the tax season is starting, what we ask the clients is to provide, your financial statements after you've done your payroll reconciliations, bank reconciliations, and come to us, bring it to them. We do a high-level initial review of financials before, preparing the returns, and then kind of go from there and prepare the returns, share the drafts, or work with the client to make sure they're compliant or file by the due date or the extended due date.
Okay, perfect. A little earlier on, you had mentioned about the tax deadlines, that were extended for those in California and certain counties, right? These were new guidelines that were issued by IRS. It would also be great to know if IRS has issued some other guidelines or any other things that IRS has planned for the upcoming tax season that would benefit our audience today.
Right. So every year, we get some notifications from IRS that these are the changes that will apply for the upcoming tax season. So some of the changes are, we are aware of Form 1099-K that, a credit card, if you get credit card payments is when you get a 1099-K from the issuer. Usually the limit was if the transactions exceeded 200 or the amount exceeds $20,000. But now the limit has been changed to $600, which is similar to other forms of 1099s we have on file. So definitely, that is one change. You'll be expected to receive from your credit card merchants these 1099K, because 600 is a very low, limit that every business definitely surpasses. Another thing, last 2 years, a lot of changes were done by the government in the need, uh, let's say it was the need of the hour due to COVID times, right? To support the businesses and everything and individuals. A lot of credits were introduced or expanded.
Yeah.
So the point to notice for 2022 tax year, the filings that will be done this year, those credits have either been reversed or reduced or taken back to pre-2019 levels. I would like to speak about few of them. There are a lot of changes, but again, definitely, first step is consult with your CPA at the time of filing. But you'll see certain changes. The refunds or the dues could have been lower, or the refunds could have been higher in the previous years, which you would see a change this year. Number one, your child tax credit, which had gone up to $3,600 per child per year, and that was entirely refundable due to the COVID times. But that has gone back to $2,000 per child, which is pre-COVID times. That is 2019 levels. Another thing is child independent care credit that had also increased, and now it has gone back again to the pre-COVID levels. Earned income tax credit, usually for lower income classes, they get this credit that was expanded. And similarly, that has reduced. People would have seen recovery rebate credit. It no longer applies. That has been completely taken off. Then, there was, usually we get a standard deduction for charitable contributions. You get itemized deduction, you get an itemized deduction if you donate to charities during the year. And that has been the rule all along for so many years. But just during COVID, an additional $300 per taxpayer was introduced, even for standard deduction taxpayers. And that has been eliminated now. So it was just for the COVID times, these changes you would notice this year that can potentially impact your refunds or payables.
Yeah, wow. So those are those were some massive credits that were brought in by the government at that point in time to kind of just offset or help people and businesses at that point in time. And now all those credits are gone. This is going to impact people and businesses and the way, they're going to be filing their 2022 tax returns. So I think it'll make a lot of sense for people to really reach out to an experienced professional who can guide them through this. I just feel that, and I was hoping to, put this question out at a later point in time, but I think the time has come right now in our conversation. Automated platforms, there are many automated systems that people can buy. Versus hiring a professional, I feel in situations that you just described, like the credits, right? I feel automated systems probably would not be as helpful as a one-on-one consultation using an expert professional. What do you have to say? I feel it'll be biased because you are an expert professional, but at the same time, I would like you to, give us a point of view from a third person point of view, really, if I may call it, on why, automated systems probably shouldn't be, used versus a real professional.
Right. So, Neha, interesting question. Like you yourself said, I could be biased, but I'll give you an unbiased answer. Automated systems are good, right? They're definitely programs developed by your experts, with finance professionals in place, right? But at the same time, a software is as smart as the human behind it, right? Now, if you are an individual with the right knowledge, right, and you are preparing a tax return on that software, knowing what each and every transaction entails, the tax implication of every transaction, definitely go for it. If you have the knowledge for it, right? But if not, relying on the software to give you the right tax payable or the tax refund is absolutely not recommended. Reason? I have received so many multiple queries in the past where clients had reached out, hey, we received this notice from the state or this IRS. What is going on? I filed my return and this is what happened. And when you look at it, those were usually automated program prepared tax returns. Now it's not the softwares are absolutely fine, right? It's the input that has been given to the softwares. Lately I've had a query asked from a business client about what softwares do you use? Isn't it automated? Doesn't the software calculate for you? Yeah. And my answer was, yes, you're right. Everything is automated these days. From phone we are holding to everything in our house is automated, right? We just have to say something and it happens. Yeah. But at the same time, the expertise that is not brought in by the software. The calculation of how a tax or a transaction appears in a tax return is the review is done by an expert and not the software. So definitely, like I said, going back to my initial thought, if you have the knowledge, and if it's a simple return, please, you can use INS free file services or the automated softwares. There are, there are multiple out there. But if you feel that there's something you're not sure of, definitely go for an expert consultation.
Okay. All right. That makes a lot of sense. Really. I mean, thank you for bringing that point out. So, we are almost 17 minutes into our discussion today, Ashleen, and the time's running by fast. We only have a total of 30 minutes, and there's so many other topics that I want to talk to you about. I want you to talk to me about Inflation Reduction Act and how does it impact individuals and businesses. I'm not sure if that's going to impact anybody who's filing this year for 2022 tax returns, but I'm pretty sure it's better to have some knowledge and be prepared for it throughout the year if it's going to impact their 2023 tax returns, which will happen next year.
Yes. So, Inflation Reduction Act was introduced last year in 2022. So you are right, it is not applicable for this tax season. So not for 2022 year, but 2023 onwards, yes. It's a 10-year plan. There's a wide range of tax laws that have been introduced, and it's a 10-year plan by the government. So it's not like everything will be applicable this year or next year. So 2022, definitely not for this tax season, but few things that I would definitely like to share with our audience is, few credits or things that they might be eligible for in 2023, since the year has started and they can plan out, because the real planning, the real work happens during the year, not at the time of filing of the return. The real work the taxpayer has to do is during the year. So, a lot of clean credits have been upgraded or improved or expanded. Let's say, for example, green home improvement credit. So the credit has increased up to 30% of the expenses, and it has like solar panels and like solar energy credits. And now we have like all these efficient appliances also. So all of these would be covered. Check with your, like I said, your expert CPA provider. So they will be able to let you know if that is eligible or not, but you're eligible for a credit subject to certain limits. Then another is clean vehicle credit, which is basically your electric vehicle credit, which you will get. There was a cap that was there until last year, like Teslas and all. There were a cap that all has been eliminated. As long as you're a certain income limits or certain purchases, qualified purchases, you're subject, or you can get electric vehicle credit as well. For businesses, a lot of, especially businesses involved in research and development, performed in United States. There are a couple of credits there also that are already existing, like as an income tax credit, or for startups, there's also payroll tax offset available. Up until now, the credit was $250,000, and it has been gone up to $500,000. So that's a huge jump. If you are involved in R&D activities, track them properly and consult with your CPA. They'll be able to guide you. on how to make the best use of these credits. The credits are still available. These credits are still available this year as well for 2022 tax year. They've just been expanded in the coming years.
All right.
Yeah.
All right. So, you know what? You actually partly answered my question, which was my next question, really, about the clean vehicle or the electric vehicles that we know. And you've kind of given me all the guidance about how these changes are going to impact people. So definitely, look for those credits. Make sure to report those credits, and seek some guidance from a CPA. Another question that I see people asking all the time is about cryptocurrencies, right? Now, cryptos, people are very confused till date whether one should be reporting their taxes on cryptocurrencies. I want to understand from you as an expert, has anything changed in terms of guidelines? And how is all of this going to impact 2022 or 2023 tax filings?
Right. So Neha, before I jump onto crypto, and that kind of brings, I just want to add something
Sure.
that will take me to the cryptocurrency as well. So, as part of Inflation Reduction Act, IRS has been funded with $80 billion amount to set up a strict audit regime and, all other improved taxpayer services.
Yeah.
So definitely, my recommendation for all the small businesses and individual taxpayers is to be extremely cautious with their filings, make sure you are compliant and follow all the tax rules and regulations that there are, because right now there are no guidelines on the audits and, that would be there, but at least, businesses can start preparing and make sure that they're compliant. Which brings me to cryptocurrencies, right? A totally, thoroughly ignored asset that has been lying around, but it's not a new asset anymore, right? It's not a new asset on the block.
It's been around for the past few years at least.
Right.
Yeah.
And the tax reporting of it has become extremely critical now. Earlier it was ignored for a long time. Taxpayers were not even aware that they have to report it. Now, reporting is there, but how they have been reported is extremely important. The exchanges that provide the deal with cryptocurrencies, they're required, not any right now, but they will be required to issue 1099 the way we receive from other stock exchanges. So this is being regularized. There's a high watch on these transactions. So make sure you're maintaining proper records, reporting it as a capital asset as it is. Now, how it will be taxed, whether ordinary or capital gain rates, depends on, variety of factors like all other capital assets. Earlier people were trying to take advantage of taking, losses on these cryptocurrencies against the gains of other stocks, but as ordinary losses also. But, now it has to be reported properly the way all your other stocks are reported, with your purchase price, your holding period. That will determine basically what the tax impact would be for them.
That's a great piece of advice right there, Ashleen. Thank you so much for sharing that. I want to quickly jump on to my next question, but before that, I have a question from Rahul Mistry, and he's asking, what happens to businesses that close their books after March 15th or April 15th? This question has come to us on LinkedIn, so if you could answer that.
So there are two things here. If I'm assuming the question is asking if the books are, the year is ending March or the year is ending December. So if the year, I'll answer both. If the year is ending December 31st and you've not finalized your books for any reason, that's fine. You can take a extension that we earlier mentioned, which will give you some time to file until September or October. You don't have to wait the entire 6 months. You can file in May or June, right? Now, the second part is about payment. So there is a formula behind it. It isn't only related to the current year income. It can also relate to your past year. So, definitely make sure that you pay some taxes as required, as estimated tax payment or extension tax payments, to avoid any unnecessary penalties and interests.
Okay. All right. I hope that answers your question, Rahul. Thank you so much for sending that question in our on LinkedIn. So I want to talk to you about Secure 2.0 Act of 2022. I want you to explain to our audience what that means and how it impacts them.
Right. So, it has just been introduced, just been turned into law.
Yeah.
So, all CPAs, all employers, payroll providers, they're kind of still analyzing it. There are a lot of retirement provisions in it. Mostly it has impacted retirement provisions. There is an act in place. So it's kind of a Secure 2.0. That's why it's called Secure 2.0. The changes are not being impacted right now. They most of them they're from 2025 and onwards, which kind of give employers and tax providers or service providers to kind of plan it properly, and see the implication of it. I want to cover 4 or 5 of them, which I know a lot of employers see, or we see it with the clients. One, there would be automatic enrollment for at least 3%, of the qualified payroll in the retirement plan for any employer with more than 10 employees.
Okay.
Now, the only exception is if you're a startup under 3 years of age.
Right.
Then another thing is, there's an automatic escalation of 1%, which will be applicable per year of completed per year of service. Right. So again, the exception still applies if you have less than 10 employees or under 3 years, you are exempted from this requirement. But 10 employees is a very less employee. You see everyone, even if you're 15, 20, then you fall under this requirement from 2025 onwards.
Okay.
There is a very interesting provision was the student loan payment. If your employee is making,
Yeah.
now employers can consider that for the matching contributions that employers provide. Usually, there are provisions of matching contributions from employers to how much an employee contributes. So a
Right.
student loan payment would qualify for that matching contribution. Then, for employers, there's a credit for retirement plan administrative costs. There's certain limits to it, that with certain number of less than 100 employees, you qualify for up to $5,000 of credit of those expenses. So, there's a lot of provisions. I won't go into detail, but definitely how it will be impacted, or if you want to learn more, contact your CPA, contact your service provider. They'll be able to guide you better with that.
Absolutely. Or if you want to, reach out to us, info@chugh.com. That's info at chugh.com. Be sure to mention Thursdays Live with Chugh and that you heard this conversation here, and we'll be able to help you and guide you. We have last 2 minutes left. Our behind the scene marketing manager, Francesca, just pinged me and told me that it's 2 minutes left. Okay, so we need to start wrapping up. But I want to, I want you to very quickly answer this question for me. Last year, we saw announcements by the Biden administration around potential changes to the tax policy, right? For those who are filing for 2022, what are some of the things that should be prepared for? Any tips or advice? Very quickly, we just have 2 minutes left.
Right. So, nothing for 2022 right now. It hasn't been formed into a law yet. But there are certain things that you can look out for future is, high income taxpayers, their tax rates or capital gain rates would increase. With every government change, you're expected to see some policy change, and that's what you're expected to see here. Digital assets are under purview a lot, like I spoke about cryptocurrency. So definitely a lot of reportings would come into picture, with these changes in place.
All right.
But yeah.
So you can't get away with making all those gains and not reporting them. You'll have to report them. Government is making sure that everything shows up on your tax returns. CPA Ashleen Sahni, thank you so much for joining me today. She is a CPA from our Herndon, Virginia office. Thank you so much. And thank you to all of you who joined us from all over the world today for this live discussion. We'll be back next week, same time, same place, with another topic. It could be a legal topic, it could be a tax-related topic, it could be immigration-related topic. To know more about it, be sure to subscribe to our channels and so that you're in the know. And if you have any questions for us, info@chugh.com. That's info@chugh.com. This is Neha Mahajan signing off. I will see you next time. Thank you, Ashleen.
Thank you, Neha. Thank you, everyone.